Hi, I'm Ron Mazurski. I'm the founder and a board member of NYPAY and a partner in Pagility Advisors. Welcome to NYPAY's Future of Credit Card Rewards and Loyalty. Will they survive and how? Presented in partnership with Fintech Connector. You're going to hear in a minute or two from Angel Lorente, who's the CEO of Fintech Connector. And you can find a link to Fintech Connector if you're interested on NYPAY's website under partners. NYPAY presents monthly events. We blend educational experience with networking within the financial services industry. Everyone you could assume that's on this call today are people that are interested in the topic of rewards and loyalty. Today, we're going to start off with an expert panel of 5 people. Those 5 people will consist of 4 speaking folks and a moderator who has crafted this event, and I'll introduce you to her in a minute. And that will be followed by 1 or 2 networking sessions where you can meet the panelists and the attendees. And those sessions are like 4 or 5 people, so smaller sessions, and you'll be able to share contact information and maybe get to know a little bit about people. It's kind of a group speed dating. From an administrative perspective, I want to ask you to type in any questions you have using the chat feature. If you want to be able to connect with others after the phone call, please put your name and email or your LinkedIn profile in that chat feature. And if you'd like to retain that contact information that's in chat, just save the chat. You'll be able to access it after the call. I'd like to ask everyone to please turn off your video during the session. Make sure your microphone is muted. I do want to thank a very special group that's NYPAY's sponsor, and the sponsor is called Further Advisory. And I hope we have a couple of people, or at least one person I know signed up from Further Advisory that is here and will make themselves known sometime during the event. I'd like to quickly cut over to Angel Lorente. Angel is the CEO of Fintech Connector, and he's going to give you a little bit of information about our partner. And just to remind everybody else, please put yourself on mute as well as turn off your video, because otherwise we have trouble with the thank you. We have trouble with bandwidth. So let's start with Angel. Can you do your intro?
Sounds good. Well, thank you very much, Ron, for, first of all, the opportunity to be a co-host today on this event with Fintech Connector and NYPAY. Also, I want to thank you for your ongoing support throughout the years. I know you and we've been talking about different fintech stuff for over 4 years now. So it's great that we have an opportunity to do this event together. More importantly, I want to thank NYPAY for being an organizational member of Fintech Connector. Also, last year, for those that don't know, we had an Innovation Day and Fintech Connector cruise here in New York. NYPAY was a media partner of that. And also, I want to thank you for all the members that showed up to our event. Hopefully, we'll continue to do a number of events together over the years, starting with the one last year, now this one, and more to come in the future. So thank you again, Ron and NYPAY, for that. For those that don't know me, my name is Angel Lorente. I do see a lot of Fintech Connected folks on here, so that's good. But for those that don't know me, I'm Angel Lorente. I'm a former Morgan Stanley Finance Executive Director. I was there for over 25 years. I started Fintech Connector while I was at Morgan Stanley. And the purpose of Fintech Connector was really to create a platform. And we started up as a meetup group here in New York at a bar, Hurley's. And it was to create a platform where we could bring together financial services executives and fintech entrepreneurs to really find ways so they could learn from each other and collaborate on fintech innovation. So it's great if I fast forward now to 2024, where the number of our community partners and investors, we've been able to grow significantly. We now have a LinkedIn-like platform with over 4,700 members in 127 countries. These members are primarily financial services executives, business business intelligence experts, and fintech entrepreneurs that are keeping to the spirit of connecting, collaborating, and creating financial services innovation. So I'm honored to be part of this today. It's great to have a number of NYPAY members being part of Fintech Connector. As I mentioned earlier, it's great to see a number of Fintech Connector members on this event today. If you're not a member of Fintech Connector, I will be sharing a link, and please feel free to join. It'll take 5 minutes to create a profile. It's free, and I will personally make sure to approve your membership, and let's connect on there as well. So again, thanks again, Ron, for giving me this opportunity with NYPAY today. I look forward to continuing our relationship, and more importantly, I look forward to welcoming a number of folks here today into the Fintech Connector familia. So I pass it back on to you, and I'm looking forward to this event.
Thank you, Angel. One other thing, were you going to set up an invite for folks that are in this sub community from this event
That is
that you'll make available to us, and we can share it with people that registered for the call?
That's correct. I will. What I did is I set up a link, a special link for NYPAY folks that if they want to join Fintech Connector, just click on that link. Take 5 minutes to create your profile, and I'll make sure also to share that with you, Ron. So then you could send it to those folks that did not join the call today as well.
Okay, very good.
I'll put that in the chat now.
Okay, thank you very much.
Thank you.
And just to remind everybody, if you would put your name and how people can contact you in the chat feature, other people will be able to see it and contact you later, or you could do it when we do the breakout groups. That's your call. Now let me move on to the event, which is introducing you to Michelle Bayo. Michelle is the CEO of Finnovator, and she's moderating today's event. Michelle was introduced to us by Angel, and we appreciate that relationship. She is going to introduce herself as well as Finnovator, what you do, and introduce us to the panelists. Can you take it away, Michelle? Thank you.
Yeah, thank you so much, Ron. It is an honor to be here this evening. Thank you, Angel, for the introduction. I'm excited for tonight's session. On a summer night, you've all gathered. I think there's more than 150 of us this evening, so everyone seems quite passionate about rewards and loyalty. So excited to get into the discussion. To share a little bit about myself, as Ron said, Michelle Bayo, CEO and founder of Finnovator, a future of finance consultancy focused on trying to help companies take one step towards a future of finance. And I spent 20 years in the corporate space, so 6 years in telco, 8 years in online shopping, affiliate marketing, ran Alaska Lufthansa, Delta United online shopping mall platforms, followed by working for Incom for 3 years and running their sales and marketing team in Canada, and then jumping off into blockchain, focused on digital identity and consent on blockchain, and then kicking off Finnovator over 5 years ago. I'm really excited for tonight's discussion because, as you know, NYPAY has hit on a very important topic, looking at the current market set with potential reduction of interchange, which will drastically potentially change the landscape. We're looking at the future of credit card rewards and loyalty programs. Will they survive, and how? And to have this discussion, thankfully, to Angel and to Ron and Ed, we have an expert lineup. Excited to introduce each one of them and then have them share a little bit about themselves and their background. We have Alex Priest, who's the CEO of Tillo and an expert on the ecosystem. We also have Nick Hugh, who's a senior editorial director at Point Sky. We have Matthew Goldman, who is the founder and managing director of Tovi LLC. And then we have Nate Bacon, who's the head of consumer and small business cards at PNC. So to start us off, I'm actually going to go backwards. Nate, can you share a little bit about yourself and your current role before we jump in?
Sure. Yeah. Thank you. Thank you for having me. Excited for the discussion here today. Yeah. So I've basically spent over 20 years in the payments and banking industry, primarily working in the credit card space. So I'm currently at PNC. I lead the product groups for the consumer and small business credit cards. And yeah, so again, looking forward to the discussion.
Thank you so much, Nate. So happy to have you here and have a bank perspective in this important discussion. Matthew, over to you.
Hi, it's my pleasure to be here. My name is Matthew Goldman, and I'm the founder of Totavi, which is a fintech product consultancy. I've been in fintech about 20 years, working at all different aspects, starting a few different card companies and credit cards, as well as working at Green Dot, which is a debit card provider, and being Chief Product Officer of Bankrate. And I'm based in Los Angeles, California.
Thanks for sharing that as well. Excited to have you here and all of that experience to this discussion. Nick, share a little bit about your role.
Awesome. Thanks, Michelle. Hi, everyone. Great to be here. My name is Nick Ewan. I'm the Senior Editorial Director here at The Points Guy. I've been with The Points Guy for over 12 years now, started as a freelance writer, then became a full-time editor, and I've been leading the editorial team for the last couple of years. Prior to that, I was a road warrior, earning tons of hotel miles, hotel points, airline miles, credit card rewards, and essentially joined The Points Guy to share the knowledge that I gained. So really excited to share the consumer perspective of something that is near and dear to my heart, both personally and professionally.
I think you've got this audience here in that same perspective. I think all of us are quite conscious of which card we use. Lastly, but definitely not least, Alex, knowing you for multiple years and actually sitting on the advisory board for Tillo, I'm excited to have you here. Share a little bit about your current role in Tillo.
Yeah, thanks, Michelle. And thanks for having me, Ron, here today. Really excited. So my accent might give it away. I'm not actually in the UK, although I am originally from the UK. I'm based in Austin, Texas. So Tillo, I founded 8 years ago, and our infrastructure is often used for banks and FIs, credit card companies, cashback businesses, reward and recognition companies actually use our infrastructure all over the globe because we've got relationships with 2,500 retailers, and we let and allow these buyers to connect to our API very simply and slickly to use our gift card infrastructure for burn of those points and rewards and things like that. So we just make it super simple for these businesses to do that. So really interested to talk about what's going to happen with interchange, what's going to happen with rewards as we know it, how the changes and differences in the UK and other markets that we operate in Europe as well as the US, and how that might look. But yeah, excited to be here. So thank you.
Excited to have all of you in this exciting discussion. I do want to share, we are going to take questions at the end. So if something comes up, please put it in the chat and we will prioritize at the end of the discussion. But to kick off, we all know the market is moving extremely quickly, first with the interchange aspect, but also in the sense from a payments perspective, thinking of real-time rails, FedNow, the potential move towards open banking. How do each of you perceive the current state of credit card and loyalty programs as they face these challenges from a consumer behavior and landscape perspective? And I was going to start with you first, Matt.
Yeah, thanks, Michelle. I think it's a really exciting time in credit cards because we're seeing so much innovation. Not only have some larger issuers, super regionals who maybe took a break from credit cards for a few years have come back in, but also there's so many new fintech companies that are trying new things, and those certainly don't all work. I founded my own credit card company that didn't really kind of take off, but we're all trying new things. That's exciting. And then some of those are working really well. Like I think a program at the top of everyone's kind of mind these days is Built Rewards, which has brought rent rewards to a new place and really created a whole new rewards ecosystem just in the last couple of years, with now reported over 2 million members, not all cardholders, but members in general. So I think it's a super exciting time, even though there are some of these potential headwinds. They're not here yet in terms of the changes we're talking about, and it's giving us a lot of opportunity to take the innovation and make new and more appealing programs for consumers.
Yeah, I think that's a really great perspective. It hasn't landed just yet. So I think it's innovation and iteration that's happening largely. Nate, I'd love to take it to you from a bank perspective, because seeing how that is kind of happening from a consumer perspective live through a bank's view is really interesting.
Yeah, I mean, I agree with Matthew's points. I mean, I think there's just a lot going on, right? And a lot of things coming down the line that we're all evaluating and looking at. I think it's going to bring a lot of different exciting opportunities for customers as well. I think if you think about open banking, for example, one of the big use cases for open banking is really making kind of switching accounts easier. Oftentimes we talk about deposit accounts with that, but even for credit card, right? As you kind of move over, if it's easier for you to go through and move your recurring payments, for Netflix and things like that, or easier to set up auto pay, all those types of things, just the ability to go from one card to the next and move your business, within minutes is there, right? So I think that is going to create some different use cases and some churn. And I think from a rewards perspective, as we look at opportunities like that, there's ways that we can, maybe our incentive offers become something where, hey, look, we'll match the rewards that you have on whatever account you're switching over, and really getting that customized, personalized feel. So there's just a lot more with a lot of these solutions. There's just a lot more data and a lot better customer experience. So I think it's incumbent on all of us as issuers of these products to make those available. Consumers are going to want them, right? And so as we think about this business, a lot of this is going to be about how do we just enable those, how do we make those transactions or that integration very easy for our customers and clients. So that's our focus.
Yeah, simplicity and APIs, I think, are definitely the underlying tone as we jump into this next space. Alex, across the pond, you've kind of already witnessed both of these things occurring in the UK over the years. How has that kind of changed the market landscape?
It's interesting because we're seeing so many different use cases for the humble gift card, and none of them are used for gifting. It's just a payment instrument, which I just think is really interesting here. So there's just a couple of use cases I wanted to highlight that may be on people's radars that I just think are really interesting. One is a company we power called Sprive. So the Tillo network comprises of 2,500 brands. I think at the end of the year we'll be at 4,000 retailers, all in 36 different countries. Now, in the UK, Sprive uses mostly the supermarket brands, the grocery brands, to enable the consumer through open banking to connect their account. It then finds out through some simple checklist which mortgage you might have. So you'll go through this process of selecting which mortgage provider you have. And then what they do is they enable the consumer through the select brands that they want to surface to that consumer to build up effectively the margin that's being offered by the retailer, the brand, to pay off their mortgage early with everyday spend. So they're reversing the traditional, which used to be in the UK, which isn't there anymore, the traditional, shop and get cash back on your credit card. And then those funds would be used on a plethora of different things that you just forget. It goes on your utility bill, it goes on your bus pass or whatever it might be. With this, you can actually actively see the funds that you're spending every week that you have to on everyday spend actually going to pay off your mortgage early, which is incredible. I think it's just a completely different use case. I certainly, when we set out the business, and the $1.5 billion worth of spend going through our network now, never did I think that it would venture from rewards and incentives into applications that are layering on top of the open banking sort of layer that's been created there for applications such as Sprive to allow consumers that are thinking about every single pound that comes out their account to go towards paying off something that's one of the biggest, purchases of their life. The other really interesting, which isn't a surprise to sort of anyone, and Nate sort of touched on it there, is personalization. So we're seeing an awful lot of cashback applications, money saving applications like the Rakuten's and these sorts of guys. In the UK, there's some incredibly big businesses that have built really off helping people get more bang for their buck. People are feeling the pain of inflation. They're feeling the pain of rising bills. They need their money to go further. And typically in the UK and especially in Europe, these reward cards aren't around anymore. So they're relying on gift cards specifically to make their money go further on everyday spend, which I think is really interesting. So personalization is really important. And a lot of these cashback applications are using the open banking, not only to just lower fees for payments, but also getting that data so they can work directly with the retailer, driving new customer spend for them. So they're actually using the data, not just to give consumers more money into their pockets, but actually using that data to work directly with those brands to get more, offer more.
Yeah, thanks so much, Alex. Because I think because in the US and in Canada, cards are so present, right? 70% of all Americans have a card that they're quite affectionate to, in the sense that they use it very often, right? They feel connected, that it's giving back to them. But in the UK, that has left many, many of years ago. So back to Matt and Nate's point, innovation and thinking outside of the box and trying new things, like how do we reward people for paying their mortgage, is powerful. And Nick, I wanted to go to you. Being at Points Guy, seeing all of this research come your way on how consumer behavior is changing, and kind of also seeing what's happening elsewhere. What are your thoughts on how, real-time rail, open banking are kind of changing the game?
Yeah, I think the big thing, I'm kind of very glass half full right now. This is kind of the golden age when it comes to consumers, of those getting access to this whole ecosystem through some of these innovations that we're seeing. New entrants, previously it was, the platinum card was the only high end, real premium credit card that was out there. Now you've seen kind of a democratization where lots of new upstarts are bringing these products to the market and reaching a broader and broader base of consumers. So I think from an access perspective, it's really the golden age when it comes to these rewards programs. And it's also a golden age for those who are big spenders. That's obviously been a huge shift in rewarding loyalty when it comes to airlines, but then also on credit card spending, is those that have huge spends for their business, or who are using corporate accounts to travel and everything like that. I think the big challenge, though, that brings into the fold is, how do you make sure that you are continuing to create a profitable loyalty program while at the same time rewarding your customers that are going to continue to use your product, whether it's a credit card, whether it's a plane, whether it is a partner completely outside of your core area of business. I mean, we've seen how valuable all these loyalty programs are. The joke I always like to say is, a lot of the major airlines right now, you could argue that they are actually marketing programs that fly planes on the side at a loss, because of how powerful all of these loyalty programs are. And I think that's going to be the challenge, is how do you make sure that you're continuing to not just maintain access, but grow your customer base and continue to offer a valuable product and make sure that it's profitable for you and your co-brand partner, if that's the product that you're in. So, our readers are obviously obsessed with our credit cards. So I think it's really a golden age for what they can do, and the access that they have to some of these rewards that maybe would have been closed off to them in the past.
Yeah, thank you, Nick. So important to think about, high spenders kind of almost paying for a program if you can cater to them and drive that volume up. I don't know if you could speak a little closer into the mic. I think we're hearing some echo that we heard in the chat. Maybe it's the earbuds. But I wanted to dig a little deeper on that. Can you share maybe this digital era of payments? How is that affecting, having how is that kind of affecting loyalty programs or top of wallet infrastructure?
Sorry, say that one more time. I was switching off my AirPods. Is that better volume now?
Yes, much better. Thank you so much. Just thinking of the digital era of payments, right? And how consumers now have their cards in their wallet. Therefore, top of wallet is really what's sitting within their Apple Wallet or Samsung Wallet. How has that kind of changed or affected the loyalty infrastructure?
Well, I think it's definitely removed friction from the actual, payment process. And the other thing that I think is really important is, if you are going to have a kind of digital payment ecosystem that is relatively frictionless, you have to pair that with a rewards ecosystem that is frictionless. And where we receive a lot of complaints from our readers is when they've earned rewards, they've invested with a particular, whether it's an airline or a hotel program or a credit card, and then they run into hassles when it comes time to actually put those rewards to use. So, thinking about the digital payment infrastructure that has really created some smoother pathways to actually transact using some of these products, that has to be paired with an equally easy to use reward structure. So I think the more that credit card issuers and that loyalty programs, co-brand partners can remove some of that friction, I think the more that customers are going to respond, and the more likely that card is going to remain at the top of your wallet, whether that's a physical wallet or the digital wallet that are driving so many transactions on a daily basis.
Yeah,
The other thing I would, just to jump in there, Michelle, the other thing I would add is that I think it creates, there's more dispersion of, how customers are using cards, right? They're using more cards, and oftentimes it's, you load the Apple card into Apple Pay because you get the rewards there, and then that's the one that sits there. But I think, to Nick's point, like, but unless you have a rewards platform that encourages all of the spend and then brings that forward in an experience that like gives you redemption and loyalty that you need, it becomes harder for the card issuer to go and actually capture wallet share. So there's a lot of instances now where people are using a higher number of credit cards, and many of them for very small segments of their transactions. And really, obviously, as an issuer, what we're looking to do is try to deliver a more connected experience where it's attractive to put all of your transactions on the product.
I think that's a really strong point, because I can say that there's kind of this trend of microbanking where consumers like to use fintechs, but they like to use their core bank, but they're using them for very specific use cases. So they might have multiple credit cards, this one being used for international travel, this one being used for, maybe specific business expenses and so on. So I think you definitely hit the nail on the head there, Nate. Matt, I wanted to ask, just in the sense that you guys are a consultancy and help kind of with that seamless experience that we've been talking about, how do you guys kind of handle to ensure the consumer is getting that seamless experience?
As I think, I agree with Nick, like the rewards component, like rewards are only worth what you can do with them, right? It sounds good to earn them, but they only truly have value when you spend them. And so making it very easy to, burn those rewards, being very understandable, can really drive and motivate people. And that's the thing that I think we see in travel so much, is the rewards are hugely aspirational, right? Like, I'm going to fly to Tahiti. Now, most people don't fly to Tahiti first class for free on points, but like you could, and it sounds appealing, and it's something you got to save up for. And so you start strategizing around how to put spend on it. And I think there's other ways to do that. Really like these experiential rewards, whether it's tickets to things or rare goods. And the other idea that is really important around points cards, differentiated from cashback, which I think are very different consumer psychologies, is I have these points and I have to spend them, and I have the freedom to spend them on something that maybe I shouldn't spend my cash on, right? Like if I get $50 cash back, maybe I'm just going to pay my electric bill because that's the thing I need to do. But if I have $50 worth of points, I can only put on a gift card. And oh no, that gift card is for Apple, and I'm going to buy some AirPods I wanted or whatever. Like, you're kind of permissioning the user to do something they want to do. So when we talk to people about building their rewards program, there's certainly the aspect of how do you align the earning benefits against what that card is for, right? Travel points for a travel card, gas points or grocery points for an everyday spend card. But then you also have to align with, like, what's the value, and how, given we all have a price cap, right? Interchange is fixed. Like, I can't just charge more for interchange for my card because I want to. So we're all working with a pretty similar pool of money. So you have to figure out a way to leverage our rewards ecosystem to make our rewards more valuable for the segment of users we're going after. Again, that's very different for like a cash back consumer. They want their cash back. They're going to maximize it at a 2% if they can get that card and they're done. But there's this whole other universe of people who participate in points, for whom we can really give them reasons to pick our card, even though maybe mathematically it's not the optimal choice in every single transaction.
Yeah, I think that leads really nicely into instant gratification and probably what Alex experiences a lot working with different challenger banks and so on.
Yeah, no, it's really interesting, that, Matt. I think what's interesting is, if I look back 8 years ago, there were very little digital brands at all. I think there was only a select, like 20 or 30. Now, in the US, 30 brands represent 2.3 trillion of spend. Now, what we're finding is the difference between the UK and Europe to the US is really interesting, because the reward and benefit market in Europe and UK is all around instant gratification via gift cards, because credit card rewards don't exist. So what's happening is you've got the employee benefit reward incentive world providing these closed user group forums, which are driving billions of pounds worth of spend to retail. And it's all within applications that are built very simply on top of the open banking layer, or they're just, powering big banks, like Lloyds Bank, for instance, and they're going through their transitioning points and they're topping up using open banking and or their debit card and they're in the store doing this. They're going around shopping with their phone, and they're buying the gift card for Tesco in their phone and then transacting immediately. And that's how they're using that payment instrument. Jump over to the US, we're seeing it via bonus sort of led. So what's happening is that you've got these closed user groups enabling consumers to top up with debit cards, and they're allowing the consumer to get a bonus on top of that gift card. So it's just reversed, because discounting and providing a lesser amount is not viewed all that great to the brand. It's much more in line with the brand's thinking and strategic thoughts of long-term promotional activity for it to be presented to the consumer as a bonus, or you're getting more, not less. And that's how we're seeing some really interesting consumer spend having in that sort of insight, which I find fascinating, because it's driving new customer growth. It's driving consumers to save money on everyday things that matter to them, which is really important. And at the heart of it, the Humble gift card is doing the hard work there. It's not the traditional rails that you're seeing. You're seeing gift cards being used as a form of payment and tender for the weekly shop or whatever it might be, which I find really interesting. It's not just the traditional rewards and incentives and the buying on your Sapphire card or Freedom card, whatever it might be, and then you're getting those points and then cashing them out. I think that is another discussion, but there presents an opportunity in itself, like which Matt touched on there, which provides that personalized element that the brand wants to be part of. If I've saved up enough and I want to cash out my points onto to some AirPods to treat myself, that's a real treat, and I'm affiliating my loyalty there to Apple and shopping on my credit card and everything. If those points or that cashback just get lost in everyday spend, it's almost a shame in some respects.
And I think, just to weigh in on that, one of the biggest things we see when our readers are looking to either get a new credit card or switch some of their spending, it's the more aspect. Like, what can I get? I can get more points. I can get more miles. I can get more cash back. I can book better, more luxury trips by shifting my loyalty. So that drives a ton of consumer behavior. And we're not talking about the churners who are opening and closing cards on a regular basis, but the ones who are really looking at, like, is there a better option for me to have it top of wallet? And it's the more aspect of it. It's that bonus potential. It comes through that initial sign-up bonus, but then it also comes through that ongoing spend and or the rewards ecosystem. And it really only takes one negative experience with a particular, inability to use rewards, or, something that kind of goes haywire. All of a sudden they're looking for, where can I get better options? And that really causes them to look at potentially, a totally different option, so that they can get a bigger return on what they're doing on a regular basis.
Yeah, and I think back to the point that Matt made, I still remember to this day the fact that I used Miles and More from United and earned enough points to just get a gift card to Macy's, buy a red dress, still own that red dress, still think of Macy's and Miles and More, even though I don't use them anymore. So I think it's a long-term loyalty concept, and that item that you purchase with it is that bonus. And if it's instantaneous, it creates relevancy and it can move a market. So that kind of leads me to Nate. I wanted to dig in, as a bank, looking at kind of the future and how the market's shifting, and what do you see the key challenges of ensuring that the card reward program maintains its relevancy and effectiveness in the coming years?
Yeah, look, I think in many ways, the whole thought around loyalty and rewards has really evolved from a banking perspective. So, I think all the way back, right, it was really, we're just focused on rewards, interchange, in many ways, we were kind of managing it as a cost center, right? It was kind of like, but we had expiration on points earned, right? There were caps, there were all these things. But really, I think what we've all learned over the period of time is that, it's really about loyalty, and actually getting people to engage in your points program is much more valuable than the actual, gross or net interchange that you're going to generate, on that specific transaction. If you get them using their points, if you get them, redeeming and actively there, then you're much more likely to be able to hold on to them. So, I think that's been sort of the evolution of these things. So I think in some ways, we've become a little less reliant on interchange to be the sole funding force of, what we do from a loyalty and rewards perspective. So I think that's the first thing. The other thing is, when you look at a lot of the evolution of these programs, there's been there hasn't been that much innovation around the rewards constructs themselves, right? It's a fairly confined group of things, right? It's going to be 3, 2, 1, or flat 2% or 1.5%, whatever. That hasn't changed all that much. But what's happening is there's more and more kind of build up around that from a loyalty perspective, where you're getting a lot of credits on these cards, whether that's, for TSA pre-check or, specific travel things. There's all these different lounge access components or credits for, like any of the Grubhub or any of those types of things, right? And I think that's been a lot of the evolution. And when we think about the future going forward, I think that's probably what we're talking about, is more diversification of a lot of different ways that you're earning value on this. It's not just the reward side. There's a lot of different opportunities there, again, for you to earn more and get varied engagement, as we build out these programs.
Yeah, I think that brings such a good point to think of partnerships, right? Like loyalty lounges and partnerships with, let's say, Uber Eats or Grubhub and all of these different plays. Nick, what are you seeing from that perspective from a points guy?
Yeah, I mean, obviously those partnerships have proliferated, and I think there is a double-edged sword there that, as I think the most extreme perspective, I don't necessarily agree with this, but I do have a colleague who has referenced that the Amex Platinum is now like a coupon card with all the statement credits that you get on this. No offense if we have an Amex rep on the call today, but there is a risk of, as you add some of these things in and create additional incentives for people to do business with these partners, there's also increased potential for breakage. And the more complicated it gets, the harder it is to use monthly credits versus twice yearly credits versus annual credits. That adds that friction that I had talked about a little bit earlier. So I think having those engaging partnerships that, again, allow the customer to feel like they're getting more out of what their potential points are worth. A great example, kind of an under the radar program, is the Choice Privileges program and their partnerships with college sports. Some of the experiences that they've made available to their customers are simply astonishing. I don't know if we have any Clemson fans on here, but go on Choice Privileges. You can get a really awesome package for the NC State game the week of September 21st. It's really fantastic. And that idea of getting more through a partnership, that is something that I think we're seeing more and more. The experiences platforms are really growing. So as long as the issuing banks and as long as their partners are really creating that idea of like, you're getting more, as opposed to more hoops to jump through in order to take advantage of some of these benefits, that's where you start to get into the breakage and really not driving that long-term loyalty, that long-term engagement. So it's a fine line to walk, and our readers are really, they're looking for those things that are going to give them additional value that's not going to require friction to actually utilize.
Yeah, and I think that really brings down to the more and personalized concept, because when you're talking about this program, you're talking about this local sports team and how that's connecting them to the brand. So I think it's that consumer experience of being so used to Amazon and so used to thinking of something and then ordering it and then receiving it. In that same concept, they're looking for their credit card to kind of almost know what they want and feel like they can have this personalization locally. Matt, kind of wanted to get your thoughts on, what do you think consumer expectations have done to the loyalty and rewards ecosystem?
Well, excuse me, I think consumer expectations just keep rising. Probably in no small part thanks to the Points Guy blog itself. I mean, which, it's funny when you think back when Brian started TPG in like 2010. And, when I first got into the space 20 years ago, it was like nerdy business consultants traveling a lot talked about their points. And now it's an everyday conversation. And as Nick mentioned, we went from there being kind of one Amex Platinum to now we have Chase Sapphire Reserve and Citi Thank You Premier. And there's so many great high-end cards. And so more and more people are aware of what's out there. More and more people are aware of what they can get out of these programs. And it's created just huge amounts of incremental pressure in terms of how do rewards programs get bigger and better. I never would have imagined that so many people would be willing to pay $600 a year for a credit card, but a lot of people do. And the willingness to pay an annual fee in exchange for benefits has really gone up dramatically, right? There was a long time when an annual fee was a real kind of product killer from a card perspective. And I think that's where these innovations really come in, where, to Nick's point, if you can create a reward that maybe has super high economic value to their recipient, but doesn't have high cost. That's the whole thing with travel, right? Like that airplane's flying, whether someone's in that seat or not, the net marginal cost of the airline is effectively zero. You can do that with other things. Can I give you, it's like these MasterCard priceless experiences. Can I give you an opportunity to see or do something that maybe doesn't really cost the issuer anything, but is huge value to the user, or negotiate these merchant funded deals where the value again to the user is $100, but the cost to the card is $50. That consumers can achieve that awareness because of the full value, because like the bar just keeps going up, and I think it's a real challenge for issuers of cards.
And I'll just weigh in that as the expectations go up, issuers, their co-brand partners, they've got to avoid the unforced errors of, accidentally missing out on an opportunity where they could add a little tweak to a personalized piece and, give them, I think of a particular airline that when you hit a certain threshold, you get preferred seat coupons. Well, if you are requalifying from already having elite status, you already get those seats for free. So is there a way that you can shift that to something that could potentially engage that customer? Or, with the, not to, pick on American Express and Delta here, but right now there's a disincentive once someone is qualified for Diamond Medallion status to continue spending on their Delta Amex co-brand credit card, because beyond that, there are not additional rewards other than, priority on the upgrade list. So I think as consumer expectations are going higher and higher, co-brand partners and issuers and merchants need to make sure that they are not inadvertently creating disincentives for consumer behavior or having those kind of unforced errors where they could leverage some of the data that they're gathering, the really robust set of information that they have on their consumers, and tweaking their value props to really meet the individual needs of the consumer.
Yeah, that makes so much sense because people just want it to be customized, right? So then I think back to Alex and fintechs and thinking about, understanding the customer spend and understanding they're spending at Nike and Starbucks and wherever else they might be spending. So gearing some bonus rewards that touch to those brands, but doing it at a discount to the actual issuer. So there's some money to be made in the exchange of value. So Alex, can you kind of describe how fintechs are being able to maybe drive some more revenue to offset costs of rewards?
Yeah. Really at the heart of it, if we talk about the elephant in the room in some respect, it's brand margin, customer acquisition margin that the brand is prepared to pay for a new customer. So not all fintechs are, they're not all, you can't pigeonhole them into one sort of area. Depending on the use case will depend on a margin. Someone in voluntary benefits that is helping consumers with making their money go further for a group of employers will have maybe one discount, and reward and recognition to these white collar workers is going to be this discount. So it's smart discounting and commission paid by the brand effectively that is funding this. Now, how is it being funded? Well, typically, not all the margin is given directly to the consumer. There is an amount that's retained. And on average, if we use averages here, there's about 800 basis points of margin available to play with, giving some to the consumer. Some is held by the fintech or the FI or partner, whoever it might be, the buyer. And they're able to run their program effectively with, in this case, a gift card centric reward based loyalty program as a part of their business that allows it to run above water, quite often the case. So we've got many partners that use the gift card as a pure revenue line themselves, and that's how they make their money. It's effectively their own interchange toll that they're charging for providing a beautiful experience for the consumer to sign up and make their money go further, or reward employees or whatever it might be. But at the heart of it is retail that is funding this. It's not anybody in between, because there's no interchange. There's no middlemen that sort of sit in the middle, if you will. Yes, you could say my business, we're in the middle in some respect, but the margin is given from the brand to the buyer, and it's up to the buyer to decide how much of that goes to the consumer. And playing on to the Points Guy, Nick's perspective, these businesses know that they need to give the majority of that to the consumer, because it's really, really competitive, and they want the consumer to be like, wow, I'm saving, or I'm getting 6% more at Kroger or wherever it might be. You want that money to as far as you can. So it's really important that these fintechs and applications are mindful of that. Sorry, Michelle, I think you're on mute.
Thanks, Alex. I think it's just really powerful to look at different ways of how these reward programs can survive as we drive forth into the future, realizing regulatory challenges, potential interchange reductions, what we were talking about before with real-time rail infrastructure potential, people starting to pay by bank, and so many other factors happening within the US market. We have about 12 minutes left, and I want to make sure we get as much in before we get to questions as possible. So Nate, I really wanted to ask you, as you look at this, considering you do consumer cards and there's so much happening within the space, from a focus standpoint, looking at trying to understand all of these pressures, what do you see as innovative strategies, specifically on partnerships within the bank, to try and drive out the most powerful loyalty programs for your consumers?
Yeah, so I think a couple things there. I'd say just first of all, just valuing loyalty. We still when we think about it as PNC, we're largely a relationship bank, right? So we're delivering credit cards to customers that have deposit account relationships with us or other products with us. And the power of the loyalty that we're getting and what we're generating with our rewards costs on the card side has significant benefits on what happens on the deposit behavior as well. So we see dramatic reductions in deposit attrition when we put a credit card in the customer's hands, for example. And so just the shift of we're thinking about the total customer relationship and less about I've got this one credit card account and I need to make this one credit card account profitable. So I think that's one of the ways we're thinking about it, is like, let's make sure we're valuing full relationships. The other thing is, I think as we move forward, certainly direct partnerships with merchants and the partnership side of things, we think, especially if there's continued action on decreasing interchange and those types of things, we'll need to find ways to generate loyalty and generate some personalized opportunities for customers without relying solely on rewards and the interchange cost to kind of do that, right? So building out a lot of that partnership, I think, is really important. And then we've touched a lot on personalization. I really feel that is the place where we need to start evolving. From a card side, forever it has been, we've got one product that looks like this, or you can pick this product that looks like that, or that product over here. I really think that a lot of that's been driven by some challenges that we have from a technology and processing perspective and things like that, where actually delivering kind of customer level personalization has been hard. There's a lot of new technology out there, a lot of these fintech processors, a lot of these new entrants are unlocking some of that, right? And I really think as we start to evolve onto those platforms, we'll be able to deliver a much different experience where we can have two people with the same product that are getting very different value props based upon who they are and how they're using those cards. So those are the three things I would probably call out.
Yeah, no, that's really powerful. And I think important for anybody who's holding a credit card loyalty program today. Matt, just realizing you work with so many companies, what are the success criterias of a credit card?
I think it depends so much what kind of card you have. So certainly for banks, there's a different set of criteria than emerging or challenger card companies. I think for banks and large, loyalty programs like hotels and airlines, a lot of it has to do with building a great rewards proposition, leveraging things like Nate just mentioned in terms of relationship rewards. I think banks that are doing that for their own proprietary cards are doing really well, right? Where they give you extra bonuses if you have additional deposits, or like Bank of America has a program. If you have, money on deposit at Merrill Lynch, you can earn 10, 50, or even 75% bonuses on your rewards. For emerging brands, I think the biggest challenge is distribution. A lot of folks come to me and they're kind of like, hey, I'm just going to go buy some ads on Credit Karma. That's not really how the world works. Those ads are not only expensive, but also you're not big enough to buy ads on Credit Karma or Bankrate or maybe even the Points Guy, right? Like those are big operations. And so it's really about, do you have an advantage distribution channel to get that unique offer in front of folks? Whether you might be an emerging e-commerce brand, adding a card and you have some existing user base, or leveraging unique merchants or experiences, right? So I think we're going to see more cards around, other passions that people have, other areas where they're spending money that are outside travel. That's kind of white space, right? So, it could be things like people who love to bicycle or golf, or, other things that are experiential like travel, but aren't specifically travel. But you got to have that distribution channel. It's really noisy out there. There's over 3,000 credit cards available in the United States, if you count all the ones from small FIs. So it takes some real effort to stand out amidst all the noise.
Yeah, there's so much happening from an options perspective. Nick, before we get to the last question, just wanted to ask your opinion as you're seeing this market evolve, seeing the success ratio that Matt was kind of layering in. What are you kind of seeing as well to add some thought to that?
Yeah, I think one of the big benefits that an upstart or a newcomer has is they're not necessarily bound by some of the same restrictions and I don't want to say narrow-minded thinking, but a lot of the partners that we deal with have massive compliance departments, lists 10 miles long of have to have this, have to say this, can't say this, must say this. And I think, where we have seen success, and Matt mentioned, Built Rewards as a great example, where they've come in and kind of, taken a completely innovative approach and really created kind of a buzzy new product, very social media savvy, tailored towards the younger generation that's renting, one of their largest expenses, and, building a huge user base that's incredibly passionate about this program. Many of them do have the credit card that's associated with it. So I think the more that companies that are newcomers to the space can kind of break through some of those traditional bounds of obviously we still need to comply with all the regulations, everything like that, but as they can appeal to especially a younger audience, potentially connect with them earlier before someone traditionally is looking at a credit card, and really getting in front of them and meeting a pain point, finding that white space like Built Rewards has done with earning rewards on the largest purchase for a lot of younger members of the younger generation. I think that's a really important opportunity, and I'm personally really excited for the additional competition out there, because that's just going to force the other larger banks to up their game. And I mean, we've seen it's kind of been an arms race. You look at the airport lounges, the co-branded airport lounges, the issuer branded lounges. I mean, they're competing and rushing to compete against each other. And I think the more new products that come out there and innovations that we see in the space, it's just going to raise the bar for what consumers expect, and then what these issuers and these co-branded partners are going to have to deliver on.
Yeah, no, thank you guys. This has been such an insightful session. I cannot believe we're 5 minutes to the hour. My final question is kind of from a futurist perspective, knowing that Europe has kind of already evolved to have no interchange. The US is kind of looking like there might be some movement towards that. And open banking being launched in Australia, Brazil, the UK, many other countries has kind of shifted from credit card spend to a little bit more pay by bank infrastructure, which will definitely have some effects as well on credit card usage. So as you guys look to the future, what do you foresee maybe one or two things that you're kind of excited about? Because we could talk about the stresses. We already talked about the fact that we need to innovate, that we need to think outside of the box. But what excites you about kind of this new step towards the future? And Nick, you were just kind of mentioning something on that. So we only have a couple minutes left. So you've got about 30, 40 seconds.
Yeah, so I think the biggest thing is just I'm excited for where these new partnerships are going to come out. I think that having outside of the box relationships, things that you never would have necessarily seen before, I think that's a real opportunity for credit card issuers to drive additional value, expose, get additional audience, bring people into the funnel. So I'm excited for. We've seen a lot of new interesting partnerships launch, and I'm excited for where those have the opportunity to grow to meet the needs of our readers here at the Points Guy and really all consumers across the spectrum.
Amazing. Alex, over to you. You've already seen the other side of the pond. What excites you for the US market?
I think we're going to see some incredible breakdown of the consumer applications from start to finish, like what Apple did with the iPhone in the early days. It reinvented the phone effectively. I think we're going to see a reinvention of deliverability of offers that are so hyper personalized. It's going to have the customer truly at the forefront of everything that the FI or the bank or the reward company is looking to do. I think it's just going to become so personalized. It's going to be quite scary, but really useful in the same sort of breath as well, which I think is going to be quite interesting. It's going to enable quicker transactions. It's going to enable really thought-provoking offers to be created, a bit like what Built's doing. I think it's going to enhance the whole customer journey. And to some of the questions, some of the points that have come through, I think it's going to be a really interesting defining moment for a lot of these businesses that are relying on the interchange and how they're going to be very creative about what they're going to do next.
Yeah, opens the door for a whole different discussion and lots of APIs to get us there. Nate.
Yeah, I think I'm in the same boat as Alex there. Like, I think it's, we just have a wealth of data, right? That we've had it for a very long time, frankly, right? So, but across all of the relationships, inclusive of spend data, but also, deposit usage, all of that kind of stuff, we just have a lot of information available to us. We have with more modern tools, we've had the ability to do a lot of analytics and a lot of analysis of that data and modeling and those types of things. But the challenge has been being able to take that and actually bring it to market, in the form of personalized offers or personalized products, like those types of things. Like, we haven't had the technology to take it to the next mile and actually turn that into customer value. And I think we're almost there, right? So like, I think that's going to be the big thing. And I think that's just super exciting.
Hyper personalization. Here we come.
Yeah.
Matt, close us off.
Yeah, I think I still am a bit of a skeptic actually on offer personalization. And we've seen folks like Cardlytics kind of not be able to do what they promised. But I do think that we're going to see more built for something else. There are like 5 built for X's being built right now, pardon the pun. And I think that this idea of more personalize the entire card, more choose your own adventure, more card selection, again, where maybe, how many airline travel cards can you have? I mean, if you're Nick or me, maybe like 10. But if you're a normal person, probably you need 1 travel card, and maybe you need 1 card for rent and 1 card for tuition and so on and so forth. So I think the ability of fintech platforms to enable much more experimentation is going to drive more unique offerings that are individually better suited for consumers.
This has been such an insightful session, guys. I thank everyone for joining us in this evening discussion. almost the end of summer. We are going to stay on for additional questions, but I just wanted to thank each of you for sharing your insights tonight, as well as, Ron and Ed and Angel for bringing us all together. So I think we've got Ed here with a whole bunch of questions for you guys. So I'll pass the mic to Ed.
Thanks, Michelle. I really appreciate that. And thanks everyone for the engagement. There are a lot of questions, and I don't know if we'll get to every one of them, but I've tried to cluster them into something that may make some sense in a conversational way. I guess the first one I wanted to throw out there for whoever would like to answer, thinking about the interchange fees maybe becoming less significant, being reduced. What are some potential new sources of funding for rewards programs that we should be expecting to come online?
I think, just to start, I think we're gonna have to see a lot more merchant funding of underlying rewards. And then as I think Nate pointed out, like larger institutions, whether it's banks or again, some fintech companies, like you see Robinhood now has, stock trading, they have crypto trading, they have a debit card, they have a credit card. And if you belong to their premium thing that's $5 a month, you get access to their better credit card rewards. So these kinds of relationship driven bonuses, I think, are a way that you can use the whole P&L to fund something that consumers get really excited about, because there isn't just endless room to just keep turning up rewards. And we know merchants aren't gonna take it. I don't think interchange is going away in the US. I think you can pry the credit cards out of the cold dead hands of America's middle class, and they will vote on that issue. But I do think that it's not going to go up, right? There's not going to be more interchange to play with either.
Yeah, it's interesting. I wouldn't mind answering some of those points there. So there's a few things I was thinking about this prior, about the interchange. I was talking to my colleague about it. I think the first is cardholder fees. I think they're going up. I think Matt just touched on it. I think people will pay more. I think we're seeing people pay more than they probably anticipated a few years ago. They're expensive, these cards, but you're getting a lot of value. And that's where all these added things that Nick was talking about, they're coming on. It's becoming even more a high bar. And then they're charging more. Look at Revolut as an example. How much revenue they're getting, not just from all the FX and the money movement that they're sending all around the world, but from their premium cards. People are paying a lot of money to be part of their premium card group. And we're seeing that from a lot of the neobanks in the world. Nubank is another one there. I think merchant partnerships, I think that's we haven't spoken much about that here today, but I think there are going to be a huge amounts of brands that are already today funding huge offers here to these companies to be part of these closed user group credit card loyalty businesses and offerings. And with more data means more ability to get more. I mean, look at Ibotta as an example. Look at they've shifted from B2C to B2B and how much revenue they've been creating through all of the work they're doing with the CPG brands there. I think the data piece is super interesting. Data monetization, I've made a note on. I think alternative financial products, and I think here becomes an interesting one for FIs. If they can somehow use these as, and I think some of them have been used as loss leaders, but if they can prove other profitable areas are being almost like super grocers, you get people in to buy the milk and the bread, you're losing money there. But if you can get them buying other things in that ecosystem, there becomes a really interesting business unit and offering. And then lastly, I made a note on getting merchants to pay more fees. I don't know if that's possible, but maybe in certain instances, you are able to charge a bit more. An example, American Express in the UK, they're able to somehow charge more for what they're doing, even to smaller merchants. I don't know how they're doing it, but they are doing it. I don't know if that could be rolled out in other areas, but those are the things that came to the top of my mind.
Those are all fantastic, and it actually sounds like there's quite a number of different levers potentially to pull. So it feels like based on about a couple of responses there that the future is sort of an all the above approach, and time will tell where the bulk of that additional funding comes from. Not to be a downer, but there's some questions around some additional headwinds here as well, and they're in the regulatory space. And so, question is, with the CFPB and other regulatory actions that have been taken, they're reducing the revenue, and so banks in particular, but everyone's sort of looking to reduce expenses. Rewards can be seen as an expense. So what extent does the regulatory realities that we've been living under represent something that is going to shrink ultimately the potential or the pie, if you will?
Yeah, I mean, I can give my perspective. I think, there's a lot of unknowns right now, right? I mean, there has been a lot of regulations, whether it's 1071 for business, or the late fee regulation, or the proposals around interchange. A lot of that is unclear. Obviously, we're also in an election cycle, so we'll see how all of this kind of comes together here over the next little bit. But obviously, there is regulator focus on this, and I think that probably doesn't go away and will have some impact. How meaningful is going to be the question. But I think the answer is the same as the last one, right? So it's basically going to drive to more diversity of income sources. Like we'll go and figure it out. I think whether that's through decreasing costs or of like loyalty and rewards through more partnerships, or if that's managing through pricing and fee revenue in other ways to kind of offset some of these costs. And I think the annual fee thing is real, right? If we are very specific in saying you can have this value, but you just have to pay X for it, I think that's certainly proven to be a very viable model. So we'll have to see how everything plays out, but I think we do have levers that we can pull. I think we are prepared for a lot of those outcomes, at least from a larger issuer perspective. I do think one of the challenges may be with some of the, we've got like 4,000 banks in this country, right? So I think on some of the smaller issuer perspective, I think it may be difficult for them to respond just from, an investment perspective to deliver some of the new kind of models and new revenue sources. So that will be an interesting thing to watch as we go through this. But yeah, I think it's going to be a dynamic period, and we've been in a dynamic period for a while. So I think we'll just continue to respond, and I think we've got avenues available to us.
I guess one last. Oh, somebody else want to weigh in on that one? I didn't mean to cut off. One last question is really more of just a quick poll for all panelists. Michelle, you're very much welcome to opine as well. Just on a percentage likelihood, what do we think is the likelihood that there is going to be a reduction of interchange?
So I'll say right now, reduction of interchange is already happening, right? With the kind of network settlements and all of this that's happening, like that's real. So I think it's 100% it's going to happen. Now, in regards to the proposal from a regulation perspective, right now I would say that it's pretty unlikely that one, as it's currently formed, goes through.
Nick, do you have an opinion there?
Yeah, I would agree with Nate. I think, Matt put it really well. Of course, our readers, are very vocal in their love of rewards and of, relaxing in an airport lounge and enjoying some of these perks. I do think annual fees will continue to go up, and, there will be ways that issuers are going to continue to compete. But from a wholesale legislation perspective, I would say the chances are low. It's greater than zero, but it is not a significant chance in its current form, at least based on what we are seeing.
Ed, do you want to do the wrap up?
Yeah, absolutely. I just wanted to make sure that I didn't cut anybody else who wanted to throw in a response on that. So let's do that. The time has flown by. We're nearly at 7:10 here. So first I want to say thank you to Michelle and our panelists, Nate, Nick, Matthew, and Alex. It's been a terrific conversation, and you really brought this topic to life. And for those of us with NYPAY, we're grateful also for the partnership and hosting the event with Angel and Fintech Connector. So as you all know, we're going to move from here to a networking session. The YouTube channel NYPAY is gonna have a copy of this recording, but we do encourage you to stay for networking. And I also did wanted to highlight some coming events really quickly. On September 9th, we're going to be holding an event called Open Banking: Opportunities for Challenges for FinTech and Bank Adoption. It's an in-person event in New York, September 9th. October, we're settling on the date, but we know that we're going to be holding an event, Regulations in FinTech. And that's going to be in partnership with PayCLT. And November is TBD. So if anybody has any ideas, any questions on these events, something that you'd love to see, let us know. We're creating these in real time and in response to interest for our members and our partner organizations. So everybody's going to be put into rooms now. As Ron mentioned at the onset, 4 or 5 of us will be in these rooms and have a chance to connect and meet. You can certainly welcome to stay and do that. We would encourage it. And then also, I see a lot of folks have gone ahead and put their contact information into the chat. If you're open to connecting and networking with folks here, please do that. And before you exit the event, please also remember to download that chat so that you have the benefit of all of that. So with that, Bill, I think we're ready to move over to our short networking session.
Okay,
Ed,
stand by.
before
Ron?
we go off, I just want to check, Angel, did you have one last thing to highlight?
Sure. No, thank you, Ron. And thanks again. This was a great panel discussion today. One last thing, if you check the chat, I just included the special invite for the NYPAY event participants. Please feel free to join FinTech Connector. It is free, and you'll be able to connect with a community of 4,700 members in 127 countries that are all about FinTech. Thank you, Ron.